So most investors have had this experience. They wire money into a deal and then radio silence. Maybe a vague update months later. Maybe tax documents show up late. Maybe you feel forgotten. Well, at Faris Capital Partners, we've designed an investor experience that's the opposite of that. We call it the full-out investor experience. And it's built to give our partners confidence, clarity, and a whole lot of care. Now, today, we're going to be sharing how we deliver on that promise every month, every quarter, and throughout every single deal moving forward. John, it's great to be here with you.
So good to be here, Mark. You know, this was a big topic for us when we first started talking about Faris Capital Partners, and having had, personally some less than stellar experiences investing, often driven by poor communication at the end of the day. I mean, it really always tends to boil down to that in my mind. When it comes to service, it's about strong communication. If you get that right, usually everything else comes together. And so it's an exciting topic to dive into today. I'm looking forward to it.
Yeah, right on. And if you are looking for a deal right now and you're not sure what you should be able to do in this market, because there's a lot of uncertainty, tariffs, go to fulloutinvesting.com and you're going to see our 10-step full-out investing process, which is recession resistant, the types of deals that we go after. And there's actually a sample deal on there as well that you can check out to learn more about what a potential deal will look like coming in with Faris Capital Partners moving forward. Go to fulloutinvesting.com. It'll definitely be worth your time. You'll learn a lot, even if it's not the right fit.
That's right. Mark, full out. I know, we own that trade, Mark, right?
Yeah,
so it's a term that's like super important to us. And I mean, it probably comes up every single day in a meeting or in a conversation, right? And so for those listening, I'd love to hear your take on what full out means to you. I know kind of from your background as a professional athlete is where you kind of pick that up, but I'd love to hear your take on full out.
Yeah, it was actually, the origin story was I was in our very first home. It was a small townhouse just north of Toronto. And I remember the blue tile in the kitchen. Joanna and myself, we were talking about, we got into real estate, selling it, and we were thinking about what slogan should we have in our marketing. And it was like yesterday, Joanna was, and this was about 15 years ago, she said, "Hey, Mark," she's like, "Full out." She's like, "Full out. Mark, you're always going full out in everything, full out in hockey, full out in real estate. We should be full out for you." And it was just like, boom. And so Joanna, my wife, came up. She's a wicked marketer, like phenomenal, one of the best that I've seen. And she had a marketing background as well. And so, the way that we look at full out is it's like passionately engaged. And the best example I can share, and we've all experienced this, when you go into a restaurant, it's very clear when somebody is full out or not. It's very clear if they're passionately engaged in what they're doing or not. And, the example is you walk in the same restaurant. So this same restaurant, you walk in one day and it's a subpar experience because the service was not engaged. They didn't care. They were just order taking. And then you walked in that same restaurant the next day and they were passionately engaged in helping you make a great selection. They were passionately engaged in what it is that they're serving. They believed in the product and they really genuinely listened to what was important, and then they delivered it with passion throughout. And it was a consistent thing. And so passionately engaged is something that is the ethos of anything. So Faris team on the real estate residential side, but definitely on Faris Capital Partners as well. And everybody that we bring on is filtered through that. Are they passionately engaged with what they do? Because you can't train that. You either have it or you don't.
Yeah, that's right. And you're dead on. I mean, it goes back to, even in the hiring process, we're looking for that. So when they talk about investing or when they talk about their role, are they lighting up? Are they excited? Can you feel that they get energy from that very thing, right? And, at the end of the day for us, investors aren't just like capital, right? They're not just putting capital into their deal. They're like partners. And in fact, when we talk about investors within our company, right, at a huddle or at our level 10 meeting, we're talking about our partners. We are locking arms, and quite literally it's right there. We're the general partner, they're the limited partner. So we're partnering up on this. And so it's very important to us. And I think some syndicators or some investment groups miss this as they think about it just in terms of a dollar invested, not an actual human being on the other side of that. And I remember you and I talking in the early days, and you said something like, it's taken these folks a lifetime to accrue this money, and we need to treat it as such. This is a big deal, and the level of trust that's coming our way, we have to overperform in that passionately engaged component in everything we do. And so, it's something that takes work and effort. It's not something you can just, create a checklist on, right? It's every day you're looking for opportunities to improve. Every day you're looking for opportunities to be a better communicator. I think about our investor updates as a good example. We knew it was important to deliver them on a monthly basis, so we sent them out. But then we asked for feedback. You would call investors up. How do you find the update? We got feedback. We incorporated that feedback, and now we've landed on a pretty consistent format that we'll continue into the future with. But that doesn't mean we don't stop looking for opportunities to improve it. And so seeking feedback, right? It's just almost like a feedback loop. You get the feedback, you apply it, you go back, you ask for more feedback, you apply it. And so it's really a lifelong pursuit. It's not something you ever are finished at, right? And so that's what full out means to me. It's that continuous, passionately engaged for sure, but that continuous push to be a little bit better every single day.
Yeah.
And that's what we do. And this is what we're talking about today with our kind of 5-step investor experience process, 5 pillars in a sense to what we do here. So number one is, it actually ties back to one of our 3 golden rules. The number 1 golden rule is we only buy deals that cash flow on day one, which means that deal is already profitable. So even if there's management challenges or expenses we think we can reduce, and certainly operational efficiencies we can apply, raising rents, et cetera, through our renovation plan, we want to buy something that on day one cash flows. And then we take it a step further by guaranteeing those cash flow distributions go out on the same day every month on a monthly basis. Now, just for clarity for an investor, those distributions typically start 3 to 6 months into our investment, just because we have to get all the financials, get all the accounts set up, stabilize everything, and just ensure everything's in great condition. And then on that first distribution, you're actually caught up back to day one, and then those monthly distributions begin. And we're proud to say we've never had to pause a distribution in our entire history at Faris Capital Partners. So that is something that's super important to us, to continue that unbroken stretch of distributions paid out in a timely fashion. Clear reporting alongside those distributions too, Mark. So somebody can go into our investor portal at any time. They have their username and login, and they can see the exact distribution history and what's projected going forward, and the financials that back up that distribution. So very transparent.
Mm-hmm. Yeah. No, the ongoing consistency and the regular meeting, or the cadence there, is really important. So it's like you don't need to wonder when it's coming. It's coming consistently every time. And so what set us up for success in that is finding the right finance CPA on our team. And so Madison McCarty, she does a phenomenal job. She's full-time CPA. She only works for our investors and is very consistent. And I'll just say, from a detailed-oriented standpoint, you're not going to get more detailed than Madison. And so the ongoing distributions are really helpful, and those come back in U.S. dollars. So we have Canadian investors, we have American investors, but for the Canadian investors, especially now with the dollar, they're absolutely loving it. I just got off the call with an investor a little earlier today, and they're like, whenever I travel down south or I'm traveling in Europe, is like, those distributions, that's paying for all of it, Mark. I'm like, very good. That's exactly the way you want it. And the cool thing to know about the way we structure this, it's return of capital. So at the end of the year, there's not any sort of income tax on that because of the structure of how we set it up. Now, when we sell the asset in 3 to 5 years, then there's a capital gains on the overall gain in the investment, and there's a little bit of recapture there. But the beauty of this is that it's very tax efficient. So if our average distribution, which is like the appetizer in our investments, is 6%, and so maybe year one it starts at 5, and then by year 5 you're up to like 7 or 8%, and it averages out around 6. Well, the beauty of that is that's what you're actually getting in your pocket, that at the end of the year, that's what you're keeping. And so it basically means that for any sort of alternative investment where you're getting cash distributions, you're getting a higher overall gross number if you're netting that out. So you're keeping more money in your pocket, it's huge. And being US dollars as well is another big thing. as well. So the investors, when they come in our deals, they really appreciate that, the consistency on a monthly basis, because a lot of other operators, John, as you know, it's like it could be quarterly that you're getting those distributions. Yes, it's a little more work on our end to do monthly, but that monthly consistency is a really big deal for our investors, and they really appreciate that consistency there.
That's right. And that return of capital component is huge as well. We'll do a whole podcast just on the difference there between return of and return on capital, but it's effectively you getting a portion of your investment back. So taxed at a different rate. So you want to work with your CPA on that, but just a much more efficient way. And you're getting some of that initial investment back on a monthly basis. The communication guarantee we've touched on before, Mark, and kind of our updates, but I think it's worth revisiting here because, candidly, you and I both had negative experiences investing and feeling left in the dark and not really understanding exactly what's happening. And I even have an investment right now. It's actually a fund that built 5 storage facilities, and they seem to be going really well. But it's like I get a 5-minute, very high level. They'll just say, well, we're at X percentage of lease up. But it's like, is that good or bad? So I literally had to go to Georgia Patron, our senior vice president of asset management, who's had a lot of experience in her career in storage, to say, is it normal to only be at this lease up at 3 months in? And she's like, yes, that's good. I'm like, okay, thanks. So, but I had to go find somebody else to gain that context because I just haven't invested in a lot of storage. It's my first deal, and so it's just not a good feeling to have to go find third-party sources to verify what's in the update when it would have been very good to say, we projected to be at 5, we're at 4.5, but here's what we're doing about it. Would have taken 2 sentences to add that clarity, but it just simply wasn't there. And, it's like a support at the name of the investment company email address. So, they're responsive, but it's not like I don't have somebody I can call, right? And so in our world, our investors know they can reach you. They know they can reach me. They can really reach any of us at any time. So if they have a question or a concern or even just a thought they'd like to share, we get some really great, feedback from our investors, right? And our partners. And they let us know things that have worked for them in their businesses, or maybe they've seen work in other investments, and we can take that into consideration. So, for us, it's not just about, checking a box on the update. It's about providing an update that adds value and is very transparent about where we're at. So it goes from everything from property highlights. Now that could be good news as well as potentially some challenges, right? Very simple example, but our Largo asset, we were aware the irrigation system didn't work, but we came to find out after closing that it was actually an issue with the well that the irrigation system runoff had gone dry. So we had to dig a new well. So we're going to communicate that to our investors. It was a bit of an unexpected expense, but thankfully it was minimal, and we had the contingency in place, and we were able to save money in other areas of our budget, particularly landscaping. So, at the end of the day, it did not have a negative effect, but we're going to communicate that regardless, just because we want to be totally transparent. We also look at, potential, challenges going on in the market area. So if a new delivery is about to hit the market, we have to be aware of that. We want our investors to know. So when I say delivery, I mean maybe a new building, with similar units nearby. Obviously, we include things like market commentary, renovation progress, and things like that. And then on a quarterly basis, we're providing the financials so someone could go through those and ask us any questions they have. So it's a big process. Myself, our asset manager, Georgia, whom I've already mentioned, our marketing director, Sristi, the 3 of us are largely involved in the creation of it. But Mark, you're reviewing it, asking questions. And what I love about your approach is you're really looking at it from the eyes of investors. So sometimes you catch us, using an acronym or a term of art, and you're like, no, let's explain that. Let's really be clear about what we're talking about here. And then we have Madison, who we've already mentioned, that detail-oriented Madison, and Stephanie, another team member, review just for grammatical errors and spelling errors, just to make sure it is tight, professional, and on point. So it's something we spend a lot of time and attention on, but it gives our investors that peace of mind. And I know you get a lot of positive feedback from our current investors on those updates.
Another investor call earlier today, John, and they're like, Mark, those investor updates, they're incredible. And they said that he's in another investment, and he's like, I'm barely getting anything from there. I'm just really disappointed. But your updates, they're phenomenal. And I would say probably the best feedback that we get, John, is that we include every single month what the new leases are that we sign for that month. And so with over 100 units, you have, month over month, there's new leases that get signed. So we have what the previous month's month's rent are or was, and then what the new month's rent are, and then we show based on the income approach, based on future projected 5 cap exit, this is how much value is creation. And so it's the beauty of that monthly update is that it shows very tangibly what the wins were in regards to the financial and how that impacts value. But it also goes over, like you had said, John, if there's any sort of like challenges that come up as well. And so there's never any sort of, something goes by a year and it's like, I didn't know about it. And those monthly updates, they're very clear. And I mean, for me, that's probably one of my favorite things about investing in real estate, John, and especially in the apartment buildings, is the fact that when you gain another $100 in monthly income, it increases the value of the building by $24,000. So when you get monthly rent lifts, $500 a month in a unit, it's just like, wow, that's phenomenal. We know we just made X amount of gain, over $100,000 in gain in value. And so it's very, we'll say, methodical, and it's very measurable. And so month over month, you can start to see the gains. And then when, John, these deals, it's like 300 we got to go through to find one. Yeah. It's like they have rent lift in these. It's because we've gone through extremely difficult, painstaking care to find the best ones that have the most amount of upside and that can be a property that we can be proud of as well.
That's right. And I think for us, it's that platinum rule idea, treat others how you want to be treated. And that's how we think about these updates. Like, what kind of update would we want to get if we were investing in deals? And we do invest in these deals, right? And so we've thought a lot about it, and you nailed it. I mean, that chart that just very simply and easily, it doesn't take like a finance degree to read it, right? You can just look at it and see unit 303 was running for $1,200. Now it's running for $1,500, $300 rent lift, this much value created, all in a line, easy. And so we just want to make it very, if somebody wants to study the update for, an hour, they can do that. If they want to glance at it for 5 minutes and move on with their day, they can do that. And they're still going to derive that value from it. So it's really kind of, once again, we just started with what would we want to see if we were an investor? And then we sought feedback from our investors, and then they brought us some great, tips and ideas, and those get incorporated there. And so I think to me, it comes down to like, why does that matter, right? As an investor? Well, it's like that consistency and that transparency that creates peace of mind. You're investing a big chunk of your hard-earned money with us, and we don't take that lightly. And so we want to help provide that peace of mind. And what we've learned is that even with challenges, right, it's really about what are you going to do about it? So we don't just tell you about the challenge, we tell you about what we're going to do about it next. So we've been very fortunate. We've had very few major challenges on any of our investments, but when we do, it's about transparency, because at the end of the day, as an investor myself, I just want to know what the plan is. Stuff happens. You can't always predict what's going to happen in the future. I mean, who could have predicted what's been happening over the past few weeks, right? So here we are. What are we going to do about it? And then I think it's also about managing trust, right? It goes back to, when you can see the details and you can see the actions we're taking on a daily, weekly, monthly basis, it helps just create, a stronger level of trust. So that's super important to us. We want our investors to know we're trustworthy and we're doing everything we can to protect their hard-earned dollars.
Yeah, for sure. And regardless, whatever company you work for, whatever intentions you have, the reality is that it's outside of just you and me, John. And so we have a full team that is working on a day-to-day basis. And so how do you create enough stress in an organization to guarantee that something's going to happen? And so what we've done is we call it this catalytic mechanism. It's if this happens, then this will happen. And so we call it our communication guarantee. And so that means that if an update does not go out on the 30th of the month, then we need to buy our investors dinner, each of our investors dinner, which is thousands and thousands of dollars.
Yeah, and so, I remember we were talking about it, and I can't remember. It was like a friend of ours or somebody in the business, and they weren't like being negative about it, but they're like, oh, and I'm like, yeah, but that's a $10,000 mistake if we miss one update. So, but you better believe it forces us, to your point, that catalytic mechanism to ensure we deliver not only a great update, but an on-time update. And so we have a lot of fun with it. We haven't missed one yet, though. I know we talked about it on a previous podcast, but the 30th hit a Sunday recently, and unbeknownst to each other, we're both texting our marketing director at 4:00 being like, where are the updates? Are the updates not scheduled? Any issues? Do I need to jump on it? What's going on? And she was, of course, all over it. But, it just forces us to make sure we're delivering on what we promise.
Yeah. And it's a little bit scary too, right? Because, we're talking about month over month over month over month over month. Like once you guarantee that, it's there for the 5 years, if that's how long the deal is going to go. Because our deals, it's anywhere from like the 3 to 5 year time frame that we hold on to them, and then we look to exit them. But that's a big commitment, month over month. And so you miss 1 month, that's one thing. But if you do it again, you're going to get hit again, again on that. So it forces our company to be very streamlined in the approach, and it forces us to deliver, which is good because that's what our clients are expecting, our investors are expecting. And so one of the investors said as well recently to me, John, is like, for us, they're a successful entrepreneur, but, they're not like, they're doing well, but they're not like multi-millionaire, but still millionaire. But that being said, the point there is like, for us, it gives us such peace of mind that we know it's coming, and it's very clear and it's very simple and easy to understand. And that's where, going back to John, you and I, we've talked a lot about this, is that outstanding communication and simplifying the messaging is something that in the financial industry we'll say there's a reputation of not doing it well. And a lot of times it's actually done purposely to confuse investors and make it seem like it's more complicated than what it is by assigning, acronyms and, one-off names that for things that just an average investor wouldn't get unless you were in the industry. And we saw this as real estate brokers, right, John? When we were speaking with buyers and sellers, there were terms in there that they just would not, it would be insider talk. And so that's where for us, it's like we're very cognizant of breaking it down to the simple so that the average investor will know. And that's what I would want as an investor as well.
Yeah, that's right. And it's kind of an example that you'll hear a lot. And it's, I'm bringing it up almost to be funny, but like dry powder, it just means investable cash, right? So, that's an example of the kind of language you'll sometimes hear in the finance world, credit default swaps and, mortgage-backed securities. And it's just, there's simpler ways to say these things, but it's part of the game, right? And so we try not to play that game. And like I said earlier, you're really good at catching us when we accidentally do it. Because sometimes when you're in it every day, it's just the language we use internally, but then you remind us not everybody's going to understand exactly what that means. Keep it real simple. A big thing too, and I'd say the third pillar is just quarterly check-in calls, just ensuring that, every investor partner of ours has a conversation with one of us. And largely that's you, Mark, but you're checking in, just making sure that, they're getting the updates regularly. I mean, we can track open rates and click-through rates when we send the updates out. So the majority of our investors are opening them and clicking through, but, we can see not 100%. So we just want to make sure, did it go to spam? Did something happen? So we're going to call, but we're also just check and see how you're doing. Do you have any questions for us? Is there anything else we can be helping you with? Mark, you and I both come from the same philosophy or school of thought that, maybe we can help, maybe they have a single family rental property and we can help, find them a mortgage broker if they want to do a refinance or refer them to an attorney that we work with. I mean, it could really be anything under the sun, but, if we have the opportunity to help, we want to give that opportunity and deliver there. So it's about, updates and making sure they're doing good, but it's also just to be a resource. And so that's something we love to do. It's not about a transaction for us. It's a long-term relationship. And we don't mind sharing. I mean, our goal is that we hope you're so happy, when you exit your first investment with us, that you're like, where's the next deal, right? And so we want to make sure that that's an incentive for us too, repeat business. And so just making sure we're building an incredible relationship of transparency, communication, and most importantly, we deliver on the projections that we've promised. And our goal is that you invest with us in the future. As long as we're around, you're hopefully investing with us. So that's really where we're focused with those quarterly calls.
Yeah. Next is our on-time tax slips. So this is a K1 for American investors. For Canadian investors, it's called a T5013. T5013. And so, John, I don't know why they just don't say an easier acronym. I know on the American side it's a K1.
Yeah.
But for Canada, it's a T50-13.
Yeah.
It's a little more like, again, they would be good if they could simplify that as well. But those tax slips come out at the end of the year without any sort of surprises. And so what that does is it basically on the U.S. side, it would show the amount of depreciation that would be allocated with that. And so for tax purposes, it is very it's simple. You just hand that to your accountant and they look after everything. On the Canadian side, there's no sort of cross-border tax structures that you need to go set up or filings or anything. We structure it in a way that our Canadians invest in a Canadian limited partnership, which those proportionate shares flow down to a Delaware limited partnership that our American investors invest into that owns the property. And so it's very simple, straightforward, and the mission for us is to always hit the timelines that are allocated for that by the CRA or the U.S. Tax Bureau as well.
Yeah, and Mark, I don't know if it's as big of an issue up in Canada, and I know you're spending time on both sides of the border these days. But in the U.S., a lot of the deals I'm invested in, the K1s are kind of you'll get it when you get it. And so, as somebody who's investing in these deals, every year I have to file an extension. And, most of our listeners in the U.S. are probably aware of that process, but it's the idea you still have to pay your taxes on April 15th, but you're just making an educated guess, right, based on what you think it is. And so without that K1, I have to go to my accountant and say, I don't really know. This is the distributions I received. And so he can kind of back into it. But what that generally means is I'm paying more than I ought to or need to, so I don't get a fine. And then I'm getting like a refund back in October. And there's one group in particular, they used to be like September, because when you file an extension April 15th, you have till October 15th. I used to get it in September. Now I've been getting it in August. So they're improving a little bit. But I feel like 90% of the year I'm thinking about taxes, and it's like, can I get a little break, between April 15th and maybe like the end of the year? So it's important because we know that the delay causes stress and frustration, right? And a lot of high net worth people file extensions for a variety of reasons in the U.S. There's strategies associated with that some people have. But I would prefer to be done with it. But I don't have that luxury because, unfortunately, some of the other companies I've invested with aren't as diligent about that, process as we are. And so it's interesting going back to Madison, at the start of the new year, we basically clear her calendar. I mean, we wipe out any unimportant meeting, anything she can skip. So she could literally have that full out, passionately engaged process, getting those financials completed, get everything to our accounting firm who runs the audit so that everything can happen on time. So there was like a good period of like 3 weeks where we didn't really see a lot of Madison. I mean, we knew what she was doing. She's sending her nightly updates, but she's just like, head down, locked in place to get that done. So it is a full out process that Madison runs there to ensure we stay on time. Once again, it's just frustration that we're trying to help our investors avoid. Is that similar in Canada? Is it often that those T5013s come late, Mark, as well, or is it a little less prevalent in Canada?
Yeah, I haven't personally had a lot of experience on that, but getting on-time tax slips is definitely something that is a concern and as a generic response out there. But the other part that we do, so when it comes to tax slips on time, and just that things are coming through without having to request for that. And, John, when I first came into the deal or into capital into this industry and knew that we needed to find a solution for our investors, I had gone into 2 other deals with 2 other operators. And so it was really interesting to see how they operated on a day-to-day basis and, in regards to the reporting and some of the timelines as well. So I got to see firsthand. And then when all the deals that we do now with Faris Capital, it's like we have full control on that. So that was probably one of we'll say that's a big opportunity or a big difference that we've seen. When we can manage everything from start to finish, then we can control when we start those and to make sure that we get those in the hands of our investors, because we've seen it not only from a personal side, but investing in deals, but then also in other operators' deals as well, to see it from that standpoint as well. And it takes a lot of planning to make sure that you hit those timelines to get ahead of it. It's not like this last minute thing that you're going to slap together, because you got to make sure you get accuracy as well.
That's right, no doubt. And this next one, the fifth pillar, is actually coming soon. It's something that we are planning in terms of the future, but we want to start implementing some exclusive events for our investors. So we have had some investor appreciation dinners in the past, and we plan to continue those. But our ultimate vision would be investor retreats for our top investors, bringing in speakers, and just looking for additional ways to add value to our investors. So if you're a current investor listening to this, know that that stuff's coming. If you're thinking about it, these are just some ideas and things we'll be implementing in the future. Right now, we're focused on acquisitions and getting our portfolio built up. But our goal here is to really build a sense of community around our investors. You know, what we've learned is the majority of our investors, they have a lot of commonality, right? They're entrepreneurs or intrapreneurs. So what I mean by that is, you know, somebody who either has a small piece of equity or, you know, is an executive level person that's really operating the business on a day-to-day basis. And so, you know, at our investor event, it was so cool, you know, our appreciation dinner, to see investors meeting each other and trading business cards and, you know, just looking for a way to bring folks together, whether for networking or just masterminding or just an opportunity to meet some new, cool, interesting individuals. So more to follow, but that's definitely something that's top of mind for us for the future, just to look for additional ways to add value to our investors beyond just the returns and the other pillars we've mentioned today.
Yeah, no, that's whenever you're building any sort of business, you always have like, okay, these are some really good milestones that we want to add in. And we have the vision, actually, John, we should whip that vision out. We'll do another podcast and we'll actually read our vision for you guys of where we want to be in 3 years. And so John and I were really big with that, with setting intention and getting very clear where we're going as a company. And not only for John and I to be clear, but also our team members and actually for investors as well. So I think that will be a really good one, John, is to read our vision. We've recently updated that as well. So there's a really good book called Vivid Vision by Cameron Herold, and he talks about writing out a multi-page document of where you see yourself in 3 years. Yeah. And 3 years is kind of that perfect timeline of it's not like a 10-year big, hairy, audacious goal. It's not 10 years out where it's a little bit too far, and 1 year is a little bit kind of tight. It's like a 3-year vision of what that looks like. It's far enough where you can reach for it, but you know, it's not so far away that you can't quite grasp it. So we read that book, and we've been very clear on what that vision is. And so those are some of the things, those events. And you know, we want to make sure especially our investors that are coming in, you know, over 500,000 and come in multiple deals. It's like we want to do something really exclusive there. And so more to come on that. But, you know, we're excited to get those check marks checked off the box of our vision statement. Yeah, that'll be good. We'll definitely do a Vivid Vision podcast there. How I think about that 3 year, it's actually, I think Bill Gates had a quote that always stuck with me. He said, you know, you sometimes overestimate what you can do in 1, but underestimate what you can do in 3 years. And so when you really sit down and write out that 3-year vision and you kind of come up with some of those big ideas, you know, we review it regularly and we're already checking so much of it off the list, right? And so it's really cool as we highlight items and things we've already accomplished and seeing like we still have a lot of work to do, but we're making really good progress here. So I would say to me, Mark, that was one of the better books you've ever, I mean, we're always trading book recommendations, but that one really just was awesome. And it's a great tool in our toolbox just to keep the team aligned around what's important at the company. So looking forward to sharing that on the podcast, our future episode of the podcast there. Yeah, right on. And John, I don't know if you're a reader or not. I can't tell from your background. It's a little hard, right? Yeah, hard to tell. For those of you listening on the podcast, go to YouTube and you'll see John's background. There's about 1,000 books behind him. Yeah. I'm worried my office might like collapse one day into my basement if I'm not careful. But that would be a bad way to go. He's like died from books falling on me.
Yeah, yeah. It's the one thing I collect, Mark. It's funny. I'm actually pretty ruthless getting rid of stuff. Like I have one box of my childhood, like literally at this point, because my mom was like, "Do you want this?" I'm like, "You can throw it," and so it's like kind of down to a box. But books, I really like holding on to. I don't know why. It's just something that brings me pleasure, I suppose. But yeah, you're a big reader too, Mark, and I think for me, that's another piece of our culture that maybe we could talk through. But that continuous growth, that continuous learning approach, how we leverage even the huddles to share intel and things that we're learning, whether from an article we read or a conversation we had. And so, that culture of continuous learning, right, is something super important to us.
Yeah, I mean, it's raising the bar. And, I just got off a podcast with a operator that scaled his business up from 25 people to 1,500 people.
Wow.
And
Unreal.
so it was like consistent 20% growth year over year over year. And he's like, the biggest thing for them is that they're constantly looking to grow, constantly looking to improve things, make things better. And, and learning and overcoming new challenges is something that's just part of the culture. Well, that's exactly, you and I came from high scaling, high growth companies that like we know what it takes in order to do that, and growth and reading and learning that's all part of it. And so taking on big challenges is another big one as well. And going through what the real estate market's gone through over the last 3 years, it's not it hasn't been easy, but that's one thing that with you and I believe our mindset is we're going to do what it takes until.
Yeah, that's right.
We're going to do what it takes until we're successful, until we overcome, and we're going to figure it out. And so the blessing that we've had, John, not only do we have complementary skill sets, but the team that we've been able to build and recruit fill in a lot of gaps that you and I have. So like collectively, we got everybody rowing in the same direction, going after big goals. And, the investors and the residents ultimately are going to be the winners in the end through this persistence. And we're getting traction, and we're seeing that and along the way, which makes it go full circle and makes things, we'll say, work a little easier as you're going through those challenges.
Yeah, the final point on the team, what's amazing, and I know you're the same, is I feel like I learn something from one of our team members every day, right? Because they're so skilled at what they do. Like our marketing person, she just knows this stuff, right? So I'm learning something from her, and Georgia and Joe, and just, the acquisition and asset manager. So it's a collective, right? We're all pulling together to achieve big goals. So very exciting. If you're listening to this, once again, fulloutinvesting.com is an absolute resource that you'll want to check out and take advantage of. You'll see a great video that outlines our process as well as why we like apartments specifically for these 5-year investment strategies. We have a sample deal, and you can book in a time to talk. And keep in mind, it's really about your opportunity to connect with us to talk about anything that's going on, the economy, how we're thinking about investing in today's world of uncertainty. We just love to connect, and it goes back to, it's not about whether you're going to invest with us or not. It's just an opportunity to build a relationship. Wherever that may lead in the future is yet unknown, but we just love to connect with folks and talk real estate, talk the economy, and all that. So fulloutinvesting.com is the resource for you.
Awesome, guys. Well, thanks for listening to the show. If you enjoyed it, please subscribe and share with other high net worth investors that you think will benefit from it. Thanks for tuning in to the Multifamily Investor Playbook. We love and believe in you guys. Keep dreaming and investing big.